It's hard facts in YouTubing world on crypto that failure to be a moon boy at every opportunity is bad for your YouTube channel. Cross-referencing recent YouTubes, you will see that our tone has been overtly risk-off. Dollar dominance is the trade theme. We've been more active in FX markets, shorting equity markets, and we have taken select altcoin shorts. If you look at a cross history of recent videos, cautions about crypto alts in trouble, 2 or 3 alts of our shorts, we gave the names to you, one of which we'd given over a month, 6 weeks ago. We have been talking for quite an extended period about the case for defense in terms of crypto. Short-term relief rally on that was now 2 months ago when you got a slight bump in Bitcoin, but that the long term is bearish. The red arrow points down. The role of the FOMC, the Fed, Bitcoin and crypto. This is the macro view, which is so important to understand, that has seen a sustained, very off period for Bitcoin, especially since the 69K. We gave most people the warnings to be out in and around the 55s. And since then have been combination of stablecoin and select alt shorts on and off, and then in a sustained period over the last 6 weeks. A liquidity crunch scenario. These are the headlines that we've been running. We've been posting less often because we never get thanked for it. Nobody likes the bear market shouter, particularly in the crypto realm. While there are moon boys that even reference the word moon in their name, always finding a reason to be bullish, you will find that this is not our affliction. I'm getting alerts triggering on the weekend. One of our primary shorts, could have a look when we first mentioned Maker to you. It would have been, I think, even 3 months ago. It's before any of these. We mentioned Maker token for the first time. You would have had to have watched that particular video. I might have to dig it out and verify what the date it was, but possibly even 3.5, 4 months ago now. This has been a big technical slap in the face. So this sell-off over here has been very bearish for Maker, and it was the beginning of what we describe as inverted HVF structure, which will lead to an unbelievable sell-off. We were taking short entries as early as 2,500s on these relative highs over here. That would have been, take you back to the beginning of the year, January. These were coming under discussion before the triggering event, which was the break of our green line over there. So you're talking about the better part of 5 or 6 months away. Actually, it progressed quite slowly because we had a chop and churn of crypto without it being overtly bullish. It wasn't clearly and specifically consistently bearish either during this period. Maker made a long-term bear flagging structure, haven't broken earlier than some of the other shorts we've mentioned more recently, like Tezos, like eGold, EGLD, which is Elrond, and a number of other select options. In fact, all crypto is looking down. We recently tweeted the only thing bullish is the relative strength of Binance, which will probably go down marginally less than the remainder of the altcoin market in what is going on. This bear flag has triggered, and we have given you before 275s, between 375 and 275 draws depending on exchange for the sell-off from 2,500. Your stops were at 2.8 on this trade, and you could have been in this trade all the time since 2.5. You would have been wondering if we were wrong. You would have watched from this low round about the back end of January all the way until recently going back into risk. You would have been negative at that point whether we were right at all. You would have sat for the better part of February, March, April. I admit to be in and out on those periods during the chop and churn. However, for the last period I've been consistently short on Maker. And this is a massive loss in market cap. These inverteds have a habit, these macro inverteds with outlier numbers. You're talking from 2,500 entries with stops at 2.8 going all the way down, not to 1,000s, not to 500s, to sub 500 levels from 2,500 entries. You're talking there, the call that we have made being 80% market cap decimation. 2,500 to below 500 means of the 5 5s in 2,500, you're shedding 4 of them and you're keeping the 1,500. And in actual fact, we've given you 275 as our target there. So almost half again of that last 20% that's left. This is in some instances close to 90% decimation from 2.5 to 250. So it's an unbelievable macro call in terms of time frame that is brought to you by the method that keeps you out of the altcoin market in this dissipating times. The big key is Bitcoin as well, but the largest key is that in actual fact, the total crypto market is nothing more than a paper ship on a much more turbulent bay where the hurricanes have come in on the macro scale. The combination of the debt markets, total market cap, and the FX markets is absolutely playing out in terms of our reset. Hence why our brand that you will find at the Market Sniper has never just been about crypto. We have never just been crypto people. We have been full-blown market understanders. If you go to the Market Sniper, you will note from our branding that it is in terms of 3 separate matters that we look at. The reset, which is the grand end for the current existing financial system, cannot be viewed independently. You cannot be an exclusive crypto viewer without taking into account that you're talking about a far bigger, older system that is totally debt-laden, that needs to fail first. This inherently is deeply deflationary. Money is dying. Debt values are losing their value at an immense rate as rates go up. This is the inverse relationship between rates and debt values. That is debt dying. An asset, somebody holds that liability, is deeply depreciating. This is where money dies, when debt is being destroyed. As the yield goes up higher and rates that required for borrowing go up higher, and you start to get closer to and a long way off still, but somewhat closer to a true price discovery of the risk in underwriting debt today of ever being repaid, particularly on a financial system that will never, under any circumstances, be able to repay its current debt obligations. You are looking at a reset. Then you look at the traditional markets. That's with the Fibonacci element in our logo over here. These are kind of small, but you know where we are. And you're talking about the financial and the bond markets. You're talking about financial and bond markets, traditional markets. This is the larger economy outside of crypto. A failure to understand that we are at the death's door on a reset of a planned takedown of an overaged, overabused, malmanaged system, at the same time as recognizing that there are traditional ways in the traditional markets that these stresses begin to show themselves, is a failure to recognize that crypto's later success requires first the death of a system and the death of money, which is highly deflationary. And this is what we're experiencing now as we pivot to the charts to show you a number of tokens that we've been observing, of which I've been referring to Maker. This is Bitcoin. Bitcoin, as much as everyone wants to talk about Bitcoin fixing this, is actually being exceedingly weak and continues to skid into lows and to be bought up. Some will say there is an immense accumulation zone in and around these levels. And this would be true in part. It would be true in part. In short, over here, you were finding, once you made a new high, you got an extensive accumulation during this zone, and that inherently we may be close to a relative low to bounce. That may possibly turn out to be true, but I do not feel it is our base case. Our base case is that yields continue to rise until something breaks in this financial system. As long as the Federal Reserve continues to tighten rates and the debt markets continue to fail and lose value with an increasing yield, you are going to continue to see dollar-related strength. Dollar is the king fiat. Bitcoin is in our anti-fiat category, much like gold and silver. The anti-fiats do not flourish on dollar strength. The other half of the Bitcoin dollar price is its relative performance to the dollar as emerging markets start to come under a major debt pain, as mature hyper-indebted markets such as the Japanese market and the badly mismanaged Eurozone market, all contemplating curve control, which means buying the debt to sustain a higher value that should not be held, to keep interest rates low. Other forms of price manipulation are going on, the dollar will remain more attractive. In terms of the dollar's progress, we have a target at 111 on the Dixie, but actually we expect that to also be overperformed. In other words, we expect continuation post this. The dollar is proving a wrecking ball, and the debt markets is proving the wrecking ball that drives the dollar. The source and the FX markets and the debt markets almost cannot be considered as siloed separate markets, because as debt starts to devalue and rates are going higher in America, debt is less desirable in Europe and Japan, and money starts to chase into the dollar. We are not seeing the Bitcoin fixes this fundamentals of money running into Bitcoin, because it is viewed in a money-destroying environment where the liquidity is often sold. So here are your traditional markets that we will be referring to before coming back to the Bitcoin chart. For example, one of the most vulnerable markets in the debt market environment is the high yield debt. And I'm hoping to find it. Here she comes, high yield. High yield debt is in an absolute spill. This is the worst quality of debt. The problem with high yield and junk debt spilling like this in this disorderly fashion is that it leads to pressure on the moderately better quality debt that takes you into most corporate debt that is just above junk debt, of which many big corporations that have failed to do well for an extended period and have borrowed to buy back their stocks so that CEOs can cash out highly generous option packages. All the corruption is coming home to roost, and the debt markets are skidding. This is a loss of value on high yield debt. This is the yield on the 10-year, the most standard benchmark rate. We gave an upside HVF of some time ago on this. Not only has the target performed, but we continue to overperform with rates pricing in further Federal Reserve action. Another key point that came out of the FOMC that crypto people may not be aware if they're not following the traditional markets is that the Federal Reserve has committed to June, the next month, to actually taking liquidity, quantitative tightening. So not just the rate rises, you're also going to be sucking out the Federal Reserve as natural buyer. They are going to be withdrawing at the rate of around 95 billion a month. Over the course of a year, that will come close to 1.2 trillion if we were even to get that close on the quantitative tightening rate. Things are going to break. That is going to further accelerate the deflationary cycle and the death of money. That means it's going to lead to a rush to cash, a rush to physical. Yes, your cash is losing at the rate of the inflation. You are in a hyper-stagflationary environment where cash is losing its buying power at a claimed 8%. The current inflation rate. However, investing in Bitcoin, investing in the stock market, investing in deflating assets is going to lose it even faster. So you are in compression of valuation. Cash right now, despite inflation, is king. Hyper-stagflationary conditions mean you don't win on cash, you just lose less, and you don't win on growth. There's no real growth in the economy. The consumer is wrecked. So for those that say we have the safety of a known, proven, long-standing since 2021 accumulation zone, that's good for now as you are dipping, but you've now come close to running this localized low. My suspicion is you will run that localized low. And in spite of people's belief in accumulation zones, yes, there'll be more buying, maybe by Michael Saylor, maybe by others, but the dollar, if it continues its journey to 111, you will likely see Bitcoin run the falling wedge lows that are the lows that we saw over here of the accumulation zone. That will see a new low that will take you into the 20s, but possibly the mid-20s. There are structure for this current possible, just because it's possible doesn't mean it performs, head and shoulder with the 42K neckline, I believe it is, running through here. 42 it is. There we go. So there are a lot of downside targets. This is not classical bottoming. We said it to you over here. We were wrong at the last Federal Open Market Committee meeting. We told you this structure looked very, very weak and should more likely resolve to the downside. However, the Federal Reserve, in its first interest rate rise in years, starting from a point of 0.25, chasing an inflation rate of 8%, avoided doing a double rate hike or anything larger towards closing the gap to the destruction of money, which is the rate of inflation less what gets paid to you at the central bank lending rate and borrowing rate and savings rate. And there was a huge gap. They only did a single quarter point. As a result, the market sighed a huge relief. We turned out inaccurate on this call, and it was the same for silver and gold, where we expected further deflation. This time, the Fed in this week came with a full half-point reduction, and it turns out all we did is we survived a little longer to complete a flag that just about every basic technical analyst saw. You then formed a broadening structure leaning on that basing ascending grind line and spilled through it as the rate hike was confirmed, and June was now given as a date, which is also what they failed to do, which led to the relief rally. They failed to declare a quantitative tightening date, and they only did 1 quarter point as their first serious step to closing 0.25 actual rates and an 8% inflation. This is why gold and silver rallied. This is why Bitcoin rallied. This time they gave you a date for quantitative tightening, and they did a full half point, and now you are finding yourself lower. We've continued not to believe in the bull case, and we've continued to guide on stable coins with regards. We've continued to guide with stable coins with regards to the markets for those that are conservative, and we have actively taken shorts, as already declared on Maker. We have also taken shorts on Tezos, which I will revert to now as we pivot down the list. Let's get them up. There were other examples that could be taken. However, you have to realize in crypto, shorting alts, in a period like this, these are all deeply correlated trades. Money management does not allow for you to take every single structure, because you will be a winner in 10 places, but you could also be a loser in 10 places if you turn out inaccurate. It's my expectation from memory that we were expecting a target in and around the ones and a run below the 1 level on Tezos. There you go. This is our corrected draw of structure going on Tezos. Actually, we faced quite a strong rally, you may have noticed. Quite a strong rally. We continued to say and guide on Twitter over here, warning to crypto friends, likely volatility on FOMC last time, relief rallies should be shorted, later fizzle. Later a fizzle. We warned this could indeed be the case. You got barely 1 day of rally. However, on Tezos it was quite significant, less so on Maker, as you've just seen. But nonetheless, very bearish for the downside on the market. With a 1.05, we can see Tezos trading in the cents, sub $1. This again, you could have taken more recently, very recently in fact, where we were getting up to 3.2s on early market entry shorts with stops in and around the 3.3s. This represents a very high reward trade. Further to which, this was optimized on lower time frames. And this is something we do in the community from the very same website that I showed you over here, where you can book a call. It costs you nothing. We're real friendly. It doesn't matter if you're not ready to buy. You can find out some of the information or detail. We have a lower cost entry study only, self-study only. However, within that, you still get a Sunday webinar, an interaction with us, an option to upgrade at a later point. You book a free call by clicking the button there, and you cannot be getting killed at times like these. So this is Tezos. Sub $1 is my overall opinion in terms of what you'll probably get to the downside. This is a very bad weekend for crypto. Some people like me to comment on Hex. Hex had a double bottom, and it may indeed have a possibility of getting through the 21. But I also want to highlight there is a fork chain. There's very few cryptos that are going up at the moment. Hex is one of very few. And nearly all of them have a very specific event that is driving that. Crypto is contracting, and I want to warn against being that one guy that's going up when everyone else is going down. Don't be too smart. Now is the time for defense, not stock picking in a bear crash. What is my suspicion that will likely happen is, given that the pulse chain is due to come and most people will want to hold the ERC20 token Ethereum based hex, EHEX, what they will do is they will be buying this so that they get a greater snapshot on PHEX. However, I will warn that the overall market is contracting, and the fact that you might have twice as many tokens, please understand, no one's going to want to hold high gas fees EHEX when PHEX is available for staking. So my suspicion is what you lose on the EHEX you end up buying, that you don't get to sell out pre-screenshot to make sure you get the PHEX, you could end up having less when you sum the two together in terms of total market cap than what you had pre-screenshot take just on Ethereum based hex. So please be warned, just because you're getting a drop of tokens and getting more tokens doesn't mean that it will lead to additional wealth or overall value add decision in a highly crypto bearish risk off environment, which is the sustained environment that you are getting right here, right now in the crypto market. So going back, let's let that one go. What else has been going on? For the fans of Ethereum, it is performing slightly better, but this technical structure is still not great. You are at possible localized lows, and you could get rallies, and it might even be at a short-term localized bottom. But I want to warn that, again, these overall structures are not the technical structure of bottomings. This is not the technical structure of a bottom, including Ethereum. So many people think, well, where do I hide? I have to stay in crypto. The best place for you is in stable coins and dollar itself, hard dollar itself. You can even reduce the stable coin risk by being in actual dollars should you choose. At the moment, the dollar is dominant on the dollar index, and please be aware of that. Overall, Ethereum dominance is kind of chopping. The one area that we did notice a relative strength was Binance, but Ethereum dominance has done okay, but it has been kind of choppy as well. I wouldn't say it's anything to particularly write home about, but it's probably better than being in other alts. But why be in any crypto right now, including ones that might be a rarity that just happen to be going up? If you want to see a relative dominance over performance, it's our opinion that you might get some of that out of Binance, for example. But that's not a sexy token. Most people don't want to hold it, but this actually has the structure of possible upside continuation. But it is one of the biggest alts, and it will probably be eating a large amount of dominance at the expense of other alts. That does not mean it's going up in dollar terms. So the Binance dominance chart over here looks promising for relative overperformance compared to other contracting cryptos. This is not a bull call on the Binance USD. This is not a bull call on the Binance USD. Again, we would need to see a real change in opinion and what is being said by the Fed to see this bottom, and then you would have a possibility of a W bottom if you reversed really strongly. Is the economic environment likely to bring that to you? At the moment, if things continue as it is, as per the Federal Reserve, the plan to tighten until real financial structures start to break and the stress, whether derivatives, repo market, debt market, consumer, etc., really start to bite. And the truth be told, the Federal Reserve is hell-bent on doing something about inflation for the first time in a long, long time. You could see them push past the point of something breaking so that you get an overreaction to the downside. Now, after we've been short on equities for an extended period, some of the best analysts are coming out and saying the SPY will need to crash to 3,000. So suddenly there is second wave, third wave bearishness. The bottom is not yet there. People have not financially capitulated yet. The VIX is not as high as it needs to be to highlight the end of real pain. We need the news headlines to be absolutely dire macroeconomically. At the moment, the Federal Reserve is talking about their awesomely strong labor market and economy on inflated dollars. This is an absolute deception, but until it's proven to be the case with a real collapse in consumer purchasing, it's unlikely that that will be recognized and admitted. This also explains why supposedly when there's inflation, gold and silver is doing so badly. This is the hyper-stagflation. They are killing growth. They are killing the ability for people to invest because they're killing cash and money, and as a result, the resources flowing into the bullion market in a heightening interest rate environment is not particularly impressive. Neither was the performance. This, by the way, in terms of gold and silver, was the same point where we were wrong for the same reason. This squeezing period over here, again, we expected downside on bullion, and in fact, the 0.25 and no date for tightening was actually treated very bullishly on gold, so much so that it is not yet retraced, unlike Bitcoin. So gold right now is at least retaining a small percentage of the inflation trade. The narrative that Bitcoin is your inflation hedge right now is not holding up, and it is being treated more like venture capital stock, such as, dare I mention it, the poor Cathie Wood that I've mentioned on the Crypto Market Sniper channel that you should also be subscribed to if you want to be kept up to date with traditional markets, and her equity ARK, A-R-K-K, which I'm finding for you now, and there she blows. That is an absolute spiller. It's a thriller. It's all the way from Manila, and it is puking all the way down. You've got a 61.8 that I suspect will run. And by the way, if you want to look at this chart monthly, it could fall a lot longer way. A created hero of the markets, and you were at a low in March 2016 in and around $14. That, my friends, on a bigger time frame, is what's called an inverted hammer. It is not typically the candle of bottoms. In fact, it's an attempt to rally that has been punished to the downside. By the way, some of those longer term charts are truly your friend. If we go and have a look at Bitcoin in terms of how it's performing on the macro, I encourage people that are learning their trade to be active investors, to have a look at the big time frame charts. That is your monthly chart on Bitcoin. This is probably a log scale. I will put the eye on just to remove all the unnecessary detail. You can see we have umpteen alerts on the upside that have yet to be triggered, yet all our downside ones are triggered. I'm going to put an alert for when we take out that technical low, and one for when we take out the lower wicks, or as we approach them at around the 30,000. This is not a good candle. That's how it looks on a regular scale. This is an attempt to rally that was rebuffed at the 40,000 and pushed back down, and is close to lows, having just got a little bit of a bid up. We were trading 34.9 as I did this, commence this video. So this is actually a minor improvement, bidding it up by $500. So your bull market, in terms of the high of 64, only saw it just being run technically, and we warned that that was not a positive event. A marginally higher high is not a positive event. Couple of scenarios that may occur. You could set up a broadening structure, just run the technical lows here, get everyone else super bearish, only to have a bounce. That is quite typical of markets when people least expect it, and you start to do something like this. This is a churn period. Most people lose money. Most people have belief systems and trade their belief systems about markets, not the markets themselves. We have warned continually from 55,000 that this is a environment for being in safe positions, stable coins, and out of almost all tokens without exception. And that hasn't changed for an extended period. This was a grave rejection that saw the fact that we ran a higher high as negative, given that we failed shortly thereafter. It would have been far better for continuation if we had not made a higher high. In the meantime, dollar index, which is part of this big equation, will be shown to you as well. And I will illustrate to you that the dollar is an absolute beast at the moment. It is charging forward thanks to those higher yields attracting money into the dollar. The dollar, unfortunately, this is not a big pitch for the control structure and dark states of America in any way. It is not necessarily a positive fact that this is the case. But if we have a look at the dollar index as how it's performed, and we will also show you that we have been broadly very, very on money here. We continued to interview Brett Johnson when everyone else was calling him a fool with his dollar milkshake theory. He didn't have our technical analysis. My charts were suggesting, and we began talking to him over here, and we watched the entire washout. This is what happens to a currency when you print 7 trillion. However, at the end of that huge stimulus event, we spotted the reversal and we said, Brent, we think you'll come into the money with your theory soon. The technicals are the track. We follow the spoor. We don't believe what people say. We follow the spoor. The track's in the sand, and this was a key reversal. Your breakout commenced there on the inverted head and shoulders, and you have since this third impulse, which is a rush third impulse on a macro HVF, very reliable HVFs on big time frames, have been in an absolute ripper of a breakout. This bull is not over. Do not call tops on reset macroeconomic events. These things will run and run and run and break your back. They'll keep on running in failure as emerging market currencies have to rush into the dollar to meet their oil needs, to meet the purchasing of their uranium needs for their nuclear plants, to purchase gas, to purchase commodities. Yes, there are alternative systems. Yes, banning Russia from SWIFT is really stupid. Yes, there are things in the loop. But for now, the macro Western system is a dollar-based currency system. And this is doing the damage. It will probably be the last and final time, but it will run and run until everybody's eyes water that is not in the dollar. And it could go on for longer than you think. Our target on this structure is at 111, but I emphasize this is an overperformance potential setup. So that might be the first resting point before possible further upside. From this level, 103, you're still looking at 6 to 6.5%. Bitcoin is going to have to face not being a key alternative in a currency where money is rushing into the dollar and there is destruction of money, thereby the liquidity, the easy liquidity, is being sold off. Okay, that's my update for the weekend. Not a good day for crypto, and the period rolls on of chop, pain, more chop, pain, rally, pain, small rally, pain, chop, and more pain. And so we go lower. And this accumulation zone, I always get, but, you're going to be wrong. The accumulation zone. An accumulation is only useful as long as it holds. The fact that you come down to it doesn't mean it's automatically going to be reversed into, especially if you're going to have this level of dollar dominance, fear, and destruction of debt valuations. People are not going to be rushing with cash to do investments. They will be feeling depleted, they will be feeling poorer, and they will have less disposable income, and the Bitcoin will be sold that is held for other core necessities and servicing higher costs of debt. All right, that's all I have to say, guys. I'm hiding behind the camera today. It's a weekend. I'm lying on my back. Don't forget, you want to come and get involved with the Sniper market community. Get the trades first and earlier at the best point. Get the education and the key macro coverage. That will help you build wealth in reset times. These are reset times. People are always asked, when's reset? You're busy watching it unfold in front of your eyes. It's slow motion until it suddenly isn't. It'll be slow until it suddenly turns fast. If you're waiting till that moment, you're going to be too late. People that want to act, start now and get ready now. There's also lots of reset financial information that you could be putting into act with plan in terms of protecting yourself from overreaching governmental interaction, control, and taxation. That could make you more efficient, retain more of your wealth for both yourself and your future heirs. If you want to find out now, book a free call and we'll see you at that point. If you have any doubts about us, live trading days are a low entry point at just $197. The next one will be in roughly 4 weeks' time. Till then, I'll catch you again. Stay safe, stay smart, and also if you do anything, trade small. Trade small and remember, the fear is big in crypto land. Bye for now.